Happy Friday, everybody. Welcome to another edition of This Week in Crypto here with the Santiment team. I'm your host, Brian. More than likely going to be solo today, but over the next hour, for those watching for the first time, I will be going over as much as we can about crypto and our on-chain and social analytics and what they're pointing toward for the next week and obviously long-term as well. The big story, obviously, this week has been more gains all around. Overall, the market caps, according to our about 2,850 assets that we track, are up another 7.4%, with the screener volume now up 21.3%. Obviously massive and a lot higher of a climb for a lot longer than I think the majority of the crowd has expected. Even much longer than many of us here at Santiment have expected, but it's, the way we do analysis, it's very week by week where we kind of look and see, is a retrace upcoming? And we haven't really seen the red flags that usually show up when prices go on a mini run like they have over the last couple of years. So it is justified that prices have continued to climb, obviously with the Bitcoin ETFs, which we'll get to, and several other aspects of the markets that have just been thriving as of late. I think it's important to remember that we're now about 2 months from the halving, so there is going to be a bit of a hype cycle going into it. I wouldn't be shocked, just to make a prediction 2 months out, for us to continue seeing a bit of a climb until the halving is on the horizon for the mainstream. I don't think the large majority of the crowd quite is looking at the halving. Most people know of it, but I don't think it's circled in red on people's calendars just yet, if that makes sense. When I think in the next 2 to 3 weeks, it's going to start being a primary topic in mainstream media. When you start seeing Jim Cramer and many news outlets start talking about the halving, that might be when we officially feel that the halving is baked in to the prices. And then we start to get FOMO from novice traders, kind of similar to what we saw with the ETFs, where perhaps we go all the way up into the day or the day before and then a correction happens. But it's so hard to predict when we're 2 months out. So this is, feel free to pull up this recording 2 months from now and we'll see how accurate it is. Obviously, we don't give investment advice on this channel. We use objective, hard-backed, back-tested metrics to make our analysis. So this is more just a prediction on how sentiment will be as we get close to the date. But we are just outside of 2 months away. Depending on your time zone, the halving should happen on either April 18th or April 19th. So we are getting very close after, the last month or a month and a half, 2 months, I should say, are still remembered as kind of the ETF learning experience where we had that big build up to the ETF, then the big disappointment after the SEC approved 11 of them, those spot Bitcoin ETFs. And then after everyone said, oh, I guess it was a letdown, that's when we had this huge secondary bull rally where we pushed all the way up to, at least for now, 52K plus and counting for Bitcoin's market value. And obviously, over the past week, if we look at some of the returns, Bitcoin being up 10%, is only a minor part of the story. Ethereum jumped a little over 12.5%. And then we have some of these enormous gainers like VeChain, which is over 60%. You'll see when we look at our trending tokens, this was one of our most tracked high social volume gainers over the past week. We have SEI up over 42%, Helium 35%, Beam 35%, BitGet token, which I believe is a new emerger into the top 100, up nearly 40%. Immutable X up another 32%. This has been one of the hugest gainers I've seen over the past 3 to 6 months. BitTensor has continued to thrive, up 35%. So a lot of the common assets that I've seen throughout 2024 thus far are just continuing to churn. Immutable X and BitTensor just being a couple, and then a few new ones being, mixed in with VeChain, which hadn't really been thriving so much, suddenly emerges with a plus 60% gain. I believe it was due to some new tech that the platform announced that got people pretty excited. And we'll look into the AI summary for that and some of the other tokens. But looking at social volume, yeah, Bitcoin had a pretty big rebound week in terms of discussion. It had started to be ignored last week, but after it crossed 50K, I believe it was Tuesday, Monday or Tuesday, depending on your time zone. It crossed 50K for the first time in over 2 years, and that really got the major media outlets back on the train of BTC specifically, after it was not being talked about so much a month after the ETFs were approved. So Bitcoin is back in the limelight for sure. Ethereum kind of being ignored. It's pretty much sitting in neutral, even though it's making some big moves itself, up over 2,800 for the first time in over 2 years. Solana, one of the big droppers. Obviously, Solana had seen some massive gains, but even though it had a quieter week relative to most of 2024, it's back up to $111, which is certainly a story there. Looking at a few others, Chainlink also a very quiet week by comparison to how it had been going, down about 23% in social volume. But most of these top altcoins in the top 100, they're seeing rises over the past 7 days compared to the 7 days prior. And that's really just a reflection of the overall chatter in crypto rising significantly. There's a lot more people talking about crypto with the mainstream media back in it, and a lot more Telegram and Discord channels and Reddit being much more active in discussing, when the all-time highs are going to happen, if there's a local top coming. And overall, we'll look at the sentiment for several assets, but it's not as positive as you may think. There is definitely a bit of a positive bias, and our weighted sentiment metric does show that things have swung into, slight greed territory for the crowd, but it isn't in, any sort of like late 2021 euphoric range right now, like you may expect. And I think there's a certain level of skepticism, and we're guilty of it too at Santiment. We've talked about previous weeks where things were looking kind of dicey, and at least we were right for a few weeks after the ETFs, and then there was this sudden big turnaround due to a few different factors, which we'll go over. But right now, the crowd is still kind of mixed. There's certainly more talk about crypto overall, which is understandable. I mean, look at the 30-day returns too, guys. This isn't just 7 days. The 30-day returns are pretty enormous too. Bitcoin's up 22.5%. You've got some assets like BitTensor that are up 2.5x, and most of these altcoins are up pretty significantly. But I'm not seeing the euphoria that one may expect when you see these kinds of gains. And we'll talk a little bit about why, and why there's so much doubt here, and why that can be a good thing for Bitcoin to continue to climb to potentially 60K and challenge its all-time high sooner rather than later here in 2024. But with all that said, let's start to look at a few metrics. And before I think it might be a good idea to look at some of the recent stories that we've posted over the previous week. For those who have not tuned in yet, we did a quick update yesterday on our YouTube channel about some of the top trending stories in crypto. And I encourage you to check out this video. It'll be somewhat similar to the quick recap we do today, but a few things have changed just in the last 16 hours or so since this video was recorded. We talked about the development activity and how we saw a significant rise in internet computer in particular. This is a project that had been sitting in the 4 to 8 spot over the past 6 months, and we can see that it has just increased significantly in terms of its daily GitHub events, to the point where it didn't just creep over Cardano, Polkadot, and Kusama into the #1 spot. It just skyrocketed and is a good 5 to 10% above them in terms of daily activity now. So that's been a big story, because these three, Cardano, Polkadot, and Kusama, they've just exchanged turns in the top spot for development activity for most of the past 3-4 years, if I recall correctly. So this is a major development, and we can absolutely take a look at Internet Computer on this stream if people request it. And by the way, please feel free to drop some requests on some altcoins you'd like to look at. We try to spend the last 15 to 20 minutes of every call looking at some of your questions and seeing what's going on with the assets that matter to you the most. We also put out a video the day before about development activity, speaking of which, so check this out if you're looking on how the methodology really works for Santiment, and why it matters so much when it comes to making decisions about your portfolio. I think it can be really, really important to understand what you're getting into, rather than just looking at this list and perceiving it as like a ranking of best buys or best sells, because that's not quite how it works. Going on to some stories, we talked about some whale transaction spikes, and many that were beginning to emerge in the second week of February. PLA, RPL, INJ, STPT, and BAT are 5 projects that we've seen some huge whale activity on as of late. And these certainly aren't the only 5, but among the top 100 to 200 or so in market cap, there's certainly ones that I would continue to keep an eye on. If nothing else, you can expect volatility when you see huge whale transaction spikes like this. It's often a precursor to a correction if the price has been thriving, or a big bounce if the price has been lagging behind the rest of the markets. So do your own research on the trends for these 5 projects, and you may find some great opportunities there. I also wanted to point out the correlation with the word all-time high. So I'm going to open up this chart really quick. This was reported in our Insight a couple days ago. And what this looks at is the frequency of 52K here in red. And obviously, as you would expect, you're going to see a big spike in the overall mentions of 52K, right, when Bitcoin surpasses 52K. But along with that, look at how there were a whole bunch of spikes related to all-time high. It's not coincidental that prices started to taper off right as 52K and all-time high were beginning to get spammed in social media, on Telegram, Reddit, Discord, and 4chan. And this is quite common. You can see, I mean, even going back to January 11th, this was right when the ETFs were announced. Suddenly people are talking about all-time highs, even though we're not close to an all-time high. And that's one of the, in my opinion, primary reflections of greed occurring in the overall crypto sphere. So in short, you guys know the basic rules by now. Prices generally move the opposite direction of the crowd's expectations. When you see a lot of people spamming all-time high, it's pretty much a reflection that they're feeling greedy and they're expecting prices to continue to skyrocket. Therefore, the probability of a retrace is much more likely. On the other end of the spectrum, if we see a word like spam or scam, sorry, or sell, all these negative words, those are signs that people are very fearful, and they're often that timing is very often correlated with a perfect time to buy while everyone else is so fearful. So I really love this chart, and it's really as simple as just going to social trends and going to the search right here and adding keywords like that, and then you can save it. as a bookmark and check it out anytime you'd like, or you can just go to our insights page and you can check on the link anytime you'd like right here. We talked earlier in the week about altcoin prices. Obviously, we just gave you an update on some of the leaders there. We also talked about, this is somewhat similar to the chart we just looked at. Check this chart out. So this is a correlation of mentions in price, psychological price kind of milestones, those being big round numbers that often incite people to talk about Bitcoin's price more whenever it crosses something like 40K or 45 or 50 or even 55K. Those are the 4 big psychological support / resistance levels that I recommend keeping an eye on right now, because when those prices get crossed, you're obviously going to see a lot of talk about those specific prices, and very often there's a big shift right when that happens, depending on how much people are celebrating those prices or scared of those prices. You know, obviously they're going to be celebrating when it's on the way up and freaked out if it's on the way down. But you can see several occurrences, especially this one at 45K, as Bitcoin's price zoomed past it right at the beginning of the year, there was a big correction there. And once they stopped talking about 45K so much, the journey higher resumes for Bitcoin. This was a fear spike when it fell below 40K. It's done that plenty of times, like back here where there wasn't that much talk about 40K, but when it did actually fall well below it, big panic by the crowd, and that ended up being one of the best times to buy. This was only about 3 weeks ago when this happened, and obviously you would have gained about 22-23% on your buy if you bought around 39K when this plummet happened. And then of course this was a huge greed sign, because 55K, this is what this brown spike means, 55K hasn't happened yet. The last time we saw 55K was December of 2021, and people are already talking about it as though it's an inevitability. And yeah, it probably is, but that doesn't mean it's right around the corner. And the more people are talking about prices that haven't even occurred yet, just like we looked at with all-time high, that's more a reflection of greed and increases the probability that the crowd is starting to get too bullish, and those key stakeholders, the ones with large amounts of capital, can send the prices down in a hurry. So when you see these 55K spikes before 55K is even relevant, that's a signal that you can probably sell and buy back at a lower price if that's something you're interested in doing. Few other ones I wanted to touch on. The CPI was, of course, a big story at the beginning of the week. You can see that each of the 4 occurrences of CPI and when they occurred, according to the crowd's interest level at least, that's when there was a big shift in the market. Going back to mid-November, there was a big downswing right before the CPI, and then it ended up being one of the biggest opportunities to buy. You'd be up significant money if you had bought back in the November CPI report. Similarly, there was a downswing before the CPI report in mid-December, and then a big rise after. Here, there was a big rise because everyone saw the previous 2 CPI reports and said, oh, I'm getting in now. That ended up being the ideal time to sell. So you can see a trend here. Basically, whatever price direction you're seeing prior to these CPI reports, you'll often see a turnaround after the report actually comes to fruition. You've probably heard the phenomenon of buy the rumor, sell the news, or sell the rumor, buy the news. These occurrences happen in each of these 3 cycles. And then on the 4th one, what happened? Well, we dropped right before the CPI report. It's tough to see, but pretty much the day before, people were anticipating a poor CPI report. And actually, the CPI report was a little bit disappointing because inflation was higher than what experts had anticipated. However, it ended up not mattering. It's more so at least based on recent history, whatever the direction the crowd was leaning toward prior to the CPI report, the opposite direction occurs after, regardless of what the report says, which is very interesting. Obviously, it has a greater impact, this report, on equities markets than crypto, but those two are still very correlated. And I think this would actually be a perfect segue for us to look at how crypto versus equities are shaping up as of right now. I'm going to duplicate this tab really quick. And let's take a look at the template. I can't wait to talk about whales, but we're going to do this first. So this is the last, let's see, it's probably a little too long. Let's just look at the last 6 months of Bitcoin and Ethereum and the S&P 500 and even gold's price, comparing them directly to one another. So one thing immediately stands out. Bitcoin and the S&P are still correlated a lot more than you may think. The S&P obviously is not as volatile, but if we just hold shift, since late October, the S&P itself is up 22%, while Bitcoin is up 50%. And it may not seem like it, but Ethereum has actually outperformed Bitcoin, up about 54%. So it's edged it out by just a bit. This is pretty common for all three to stay closely intertwined. And there have been several opportunities where you can see bullish divergences forming, especially right here, where you can see the S&P between January 16th and the 25th. It went on a nice run here, but crypto did not. This was the reaction to the ETFs and a lot of people panicking after the price initially went down. This was a classic bullish divergence. And Max, I see your chat. Feel free to jump in if you'd like to come and talk. We'd love to have you. But this was a classic bullish divergence for crypto. And it ended up being a fantastic time to buy because the correlation between equities and crypto has been pretty consistent for, I'd say, almost 2 years now. There are plenty of exceptions, such as the FTX collapse and a few other events. But overall, if you're monitoring, when the S&P 500 is getting an all-time high while crypto is falling, it's usually been a pretty good time to scoop up crypto, and this was no exception. Meanwhile, gold, by the way, has been lagging behind significantly. I wouldn't be surprised if gold had a little bit of a run itself. It's obviously not as correlated to the two, but we've still seen plenty of evidence to show that this line as well can play catch up at times. So if you're jumping between sectors, I still see an advantage to kind of buying into the line that is playing catch up with the others, and that even includes Ethereum. When Ethereum is way down here, it ended up being the best buy back in mid-October, as we just established. So the correlation is still very much intact, and you can see that at least over the last 6 months, they're both pretty much at 6-month high levels. Bitcoin obviously is at about a 2-year high still, with the actual 2-year high happening about 24 hours ago, getting above 52K. And the S&P 500 is still very close to its all-time high, which officially happened back on February 12th before a slight retracement occurred. All right, so that's the correlation going on. Let's take a look at whales now. And yeah, there was a huge development that happened just in the past week. So we've talked about some of the concerns that we've seen, particularly with the dry powder, the amount of buying power that's been relevant in Tether and USD coin going back to June of last year, where Tether especially started to drop off significantly in terms of the amount held by those key sharks and whales that hold anywhere between $100,000 to $10 million. And during that time, we also saw the amount of Bitcoin, at least the percentage of Bitcoin held by these sharks and whales dropping. On a better note, though, this dark green line actually shows the absolute value because of the fact that more and more Bitcoin are being mined. These sharks and whales were not exactly dropping a ton of Bitcoin, even though the percentage of the supply was implying they were. In fact, if we go to the lowest point back in April of 2023, they were holding about 12.84 million, going back about 10 months, and now they're holding 13.08 million for an increase of about 241.3 thousand BTC, which is a 1.88% climb in terms of their overall holdings. But particularly since February 5th, just the last 10 days or so, we've seen a huge rise in accumulation. They've added 101,910 BTC collectively. These are total wallets between 10 and 10,000. That's one of the biggest rises we've seen, especially going back to mid-June. That's when we saw something similar. And we saw what happened in mid-June. These green bars of the price, there was a sudden rise, just like what we're seeing now with another sudden rise going on. So yeah, I believe that the biggest reason for this rise was shark and whale accumulation over the past week in particular. And that's what pushed us over 50K when so many people were doubting that this price level could occur, especially this quickly. I don't see a sign of it slowing down. I think this is one of the best charts you can monitor. Feel free to copy the URL if you are reading it. It's relatively short, so I'll just type it in manually, or maybe Baresh can type it in the chat for you guys. But as long as these sharks and whales are continuing to accumulate, I'd feel pretty confident that the all-time high could be challenged in the next few months. We'll see what kind of momentum they have going into next week, and I can't wait to update on next week's This Week in Crypto stream. But this is some of the best news I've seen in quite a while, this level of accumulation, both on the absolute side and even the percent of supply, where they accumulated almost 0.5% of the entire supply of Bitcoin just since February 4th. That is massive. On a similar note, you can also take a look at the fact that Bitcoin's supply in exchanges has continued to decline significantly, down to 5.21%, which is about a little over a 6-year low. That's actually a good sign. It means there is less risk of a future massive sell-off as less and less BTC sit on exchanges to be sold off at any given time. So yeah, ETFs almost certainly have a lot to do with it, as more and more BTC is moved out of exchanges and people are investing in it in less direct ways. Getting exposure through ETFs means they're not holding the Bitcoin. That was part of the entire appeal of the ETFs and why people were so bullish on that, because they knew that non-traditional crypto investors would be able to invest in crypto in a more comfortable way for themselves, and crypto would be able to capture more of the equity investor interest, and I believe that's exactly what happened. So yeah, the supply on exchanges has really plummeted, while the supply of Tether on exchanges has actually stayed quite high, going back to right around the day that the ETFs were approved about 5 weeks ago. So they're very high. Even USD coin, which is not nearly as high as it used to be, but it's at least been climbing again. So the dry powder, the buying power of for buying Bitcoin and other coins is quite high, and the amount that can be sold off of Bitcoin is quite low. That's an optimal combination and really helps explain why this rise has been happening. Let's also take a look at the social dominance of Bitcoin. I'm going to change this to 7 days so it's not quite so noisy. And yeah, it's overall more and more discussion related to Bitcoin over the past month. That makes sense. We did see a drop off at the end of the month. This was when we were really on an altcoin frenzy. but then crossing above 50K changed all that, and we're now seeing lots of BTC discussion once again. So not a big surprise there. Funding rates, surprisingly neutral, other than a tiny blip right here on Valentine's Day. Not much longing and euphoria, as you may expect. This was the predecessor at the end of the year to the eventual drop-off, but that hasn't really been a factor here in 2024. I would just say for the funding rate, look out for any sort of huge spikes indicating people are opening margin trades and leveraged longs to try to get, greedily as much money into their gains as possible. On the alternative end, if you see a bunch of shorts all of a sudden, that means people are anticipating a top, or they think that prices are about to plummet. That actually would be a great sign, because those liquidations can just act as rocket fuel for prices to continue to go higher. Right now, though, pretty neutral. Also, take a look at this. I think this is undoubtedly due to ETFs more than anything, but since January 20th, we had 52.95 million total BTC addresses with more than 0 Bitcoin in them. That number now sits at 52.16 million. May not sound like a big drop off, but with a percentage decline of about 1.5% and about 791,000 Bitcoin addresses lost, this is one of the biggest drops we've seen in quite a while. The only comparable one I've seen in recent memory is back in late September. This was right before the bull rally began, and that's where we saw in about 10 days a drop off of about 2.2% of Bitcoin addresses. And this is usually something that only occurs when it's a lot of really tiny addresses that are liquidating, and it's kind of a sign of capitulation. Now, I do think it's a little bit different now that we're in the post-ETF era. It really could just mean that a lot of small addresses are liquidating and getting into ETF exposure instead. But regardless, I generally view a drop in Bitcoin addresses as a bullish event. Just like if an altcoin sees a bunch of coins burned and prices actually go up because of that, it's somewhat of a similar phenomenon where you see a lot of drop-offs in wallets, and it actually is indicative of more coins going into, or at least a high percentage of coins going into larger wallets by default. And I think that's kind of what's going on now. And obviously there's been a positive correlation with price once again. So let's take a look as the month progresses as to whether this trend continues to go down. I think, honestly, I think this peak here on January 20th might be the highest amount of non-zero Bitcoin wallets we will see for a long time, because of the fact that so many Bitcoin wallets are simply converting to ETF exposure instead. We'll probably surpass it at some point just because crypto will continue to grow, but I wouldn't be surprised if for months and months this ends up being the highest amount we see for a long time. And then percent of supply and profit. I think in terms of something that's a bit more concerning, Bitcoin, in terms of all the Bitcoin that has ever existed and timestamping when those respective Bitcoin began to exist, 94.37% of them are now in profit. This is one of the highest points we have ever seen. Switch to all time. There have been moments where we got, I think these numbers are slightly skewed, but in April of 2021, we were seeing some near 100% numbers, but anything above 90% here is generally considered to be a little bit scary, meaning that the coins are, or the overall markets are a bit overheated because of just how many of the overall coin supply is in profit. Generally, I've seen about 75 to 80% being that line, where anything above means we're a little overheated, anything below means we actually are seeing an opportunity. But for now, 93.7% or so is quite excessively high. We have a template that I can show too. Percent of supply and profit comparison. We'll just look at the last year. So this takes a look at some of our top caps. So by comparison, 93.7% of Bitcoin is in profit, 89% of Ethereum, 85% of XRP, 78% of Cardano, 71% of Doge, about 92.5% for Link, 65% for Matic, and only 44% for Litecoin. So these change pretty dramatically depending on which top cap you look at. But I think that we can do some more research on this metric to see what kind of correlations exist here. I find it to be a really fascinating one. The one that I've studied the most is obviously Bitcoin, where I do believe that anything above 80% can be a bit of a caution flag. All right, so we touched on percent in profit. We touched on correlation. Why don't we take a look at some of the trending tokens now before we get into some of the questions? I think as far as the on-chain analysis for Bitcoin, I can say this, as far as our NVT model goes, we're still looking pretty good. It's been mostly neutral here in February after we saw a semi-bullish signal, and you can see what happens once we get just a little bit of green. It really can precede a huge boom in terms of crypto's market cap. So I like to look at this as kind of like a 1 month lead chart, and whatever the price, whatever the bar is showing, the color of the bar, the following month will kind of take that direction. Now, yes, we saw plenty of red, even though prices were rebounding. And I think this was mostly due to some of the crazy market manipulation that we saw from FTX, where we kind of just saw a natural mild rebound after the Alameda disaster kind of loosened its grip on the markets and allowed prices to rise again, because they admitted that they were pushing prices down. So once we finally started to see better circulation at the end of 2023, prices just went blast off. Oh, MVRV too. Something worth noting, as you would expect, because market caps crypto-wide have been booming, most of the MVRVs, according to the midterm trend, are in semi-overbought territory. A few are just straight up way overbought. It doesn't mean that we're about to see a sudden correction, but according to probability and just hedging your risk, this does indicate that we are a bit over leveraged right now because of just how much profit has been going into the pockets of the average trader right now in what is historically always going to be a zero-sum game. So at some point there will be at least a cool down period or a correction to send all of these bars back toward the neutral line or even back into semi-underbought. We saw some green about a month ago after there was that big correction following the ETF approvals, but that quickly scooped up and turned back into orange and red here. So if you're looking for a window where the risk is really low, it's not really showing right now. It's mostly semi-overbought and overbought across the board here. All right, trending tokens. Let's take a look at the ones that are getting the most traction right now. So OpenAI, this is a big story. They just launched Sora, which is a text-to-video model that allows users to create video using prompts. I know this technology has existed with some other projects in the past, but OpenAI, obviously a leader in AI, this is a much bigger deal, and they have an associated token that has been booming ever since the announcement has been made. So it has the #1 spot as of now. VE chain, or VET, has been really trending over the past 24 hours. And I mentioned this was due to a technological announcement. I'm trying to find. generating free VTHO. So it's somewhat related to something like an airdrop. And you'll often see, especially on Twitter, a lot of hashtags being used associated with this project right now. So there's a lot of swapping going on between VET and VTHO in order for traders to maximize the amount of crypto in their portfolios. You can see Cake here at number 3. That's weird. Oh, you can't actually, I see. The AI was not, this is the entire prompt, so there's nothing more to read. Stakers of XCAD USDT in Pancake Swap Farm will earn Cake. So very similar to VeChain, it's kind of a way for people to earn extra coins by staking or swapping. The word coin is being discussed. Buying and selling Bitcoin as well as the value of Bitcoin over the years. So this is more just, I don't know if it's a general, even though coin is a technical coin, I don't think this is related to the actual altcoin known as coin. It's more just discussing the overall altcoin market. We discussed VTHO associated with VET. DENT is trending because there's confusion and discussion about whether DENT-X can be swapped to DENT and vice versa. So they're trying to do something similar to what VET and VTHO are doing. WLD is trending because its price has increased by over 20% over the last 24 hours, and it's expected to dominate the market if it stays above 7,153 Satoshi. Be cautious of claims like this. If that's a common narrative, those type of trends are made to be broken if the crowd has a consensus on a specific support level and how everything is glorious as long as it stays above. We've seen that mistake be made many times, and WLD is, of course, pumping like crazy as of late, so proceed with caution on that one. LPT is trending because it printed plus 102%. It's more than doubled, and there's been a huge volume spike. So this is purely related to a very recent pump. I'd keep an eye on that. Of course, as mentioned in many previous videos, if you see an asset appearing on this top 10 list exclusively because of its price bump, very often the right action is to take profit or even short based on mathematical history. And then we, of course, see Bitcoin here still in the top 10. It's been consistently a top 10 appearer over the past 5 weeks ever since the ETFs were approved. And that doesn't just mean Bitcoin's being talked about a lot. It means that the percentage of discussion related to Bitcoin compared to its resting average is still way higher than normal. All right, so those are the trending tokens. Let me see. I don't know if I loaded. Yeah, I did. So the activity matrix here, taking a quick look at what the mathematically most hot networks are compared to their own recent averages. Taking a look at some of the recent categories, active addresses. If you're looking for an asset that is seeing some of its highest overall unique amount of addresses interacting on the networks right now, Anchor is seeing its top day, Chromia is seeing its top day, API3 and Rocket Pool have seen its second highest day. Also, shout out to Cardano, which saw its 5th highest day over the past 3 months. So Cardano is beginning to heat up as a notable asset there. Network growth, many of the same names, Chromia and Nexo seeing its highest day in terms of new addresses created. Whale transactions, Chromia again seeing its highest day in terms of $100,000 or more transactions, API3, and even Bitcoin right behind it. So Bitcoin had its second largest day in terms of whale transactions in the past 3 months yesterday. In terms of key stakeholder accumulation, keep an eye on Bitcoin Cash, which has had its moments this week of seeing some independent surges. It still seems to be pumping, particularly when Bitcoin ETFs are seeing high volume. So I think that's worth noting as well, that there's a correlation with BCH when Bitcoin's ETFs specifically are getting a lot of major attention during certain weeks. Social dominance. Cardano is seeing a bit of a spike here. That's the only notable asset I think is worth mentioning. As far as exchange outflow, if you're on the top 10 list here, that means you're getting a lot of coins moving off of exchanges compared to usual. Bitcoin there, seeing its fourth best day in terms of outflow. Pepe, also an interesting one that's been seeing a lot of outflow lately, and of course, Ethereum name service. Dormant activity, Chromia is on that list. Age consumed is also essentially dormant activity. So I see Zell just had its largest day of dormant activity yesterday. Okay, we're about 12-ish minutes until the top of the hour. So Balresh, if you see any questions related to certain tokens, feel free to shoot them my way so we can explore them really quick.
Yeah, we actually already have 2 requests. They're both not on-chain covered though, so maybe we can check the social part out. The first one is ASTR. Let me double check on the ticker.
Is that ASTA?
ASTAR is the full name.
Got it.
And the other one would be Moonbeam.
ASTR and Moonbeam. Okay. So ASTR is a top 100. It's risen significantly lately. It's at the number 74 spot now. We got Moonbeam queued up for second, and that's the 153rd ranked market cap asset. Okay, so I want to point out that ASTR is not an ERC20 asset, meaning we are going to have more limited data on it, but we do still have some social rate, social metric related assets, and possibly funding rate. I'm not sure about ASTR because it's, let me see when it first started getting publicly traded. Yeah, it's about a 2-year-old asset, so 50-50 on that one. But let's see about the metrics that we do have so we can see what's going on. Okay, so in terms of its social volume and dominance, this is looking like it's actually a good thing because of the fact that ASTR has been largely ignored. It's currently sitting at about just under 17 cents, and the amount of social dominance was at its highest back in mid-December, right before a big rise happened. It had this big mainstream crowd spike here, which signaled that a local top would form, which it did. And after the crowd started to cool down on it, there really hasn't been much talk about it since, even though just since January 7th, we're looking at about 6 weeks ago, its price has risen about 37%. So ASTR appears to not have any crazy resistance in terms of crowd FOMO right now. Looking at the weighted sentiments, that reflects that, just as we figured, since late December, looking at each week, they've all been below average in terms of sentiment. This means there isn't any euphoria related to it. And generally, when you see these big top spikes like this indicates the crowd is really into it and getting a lot of FOMO. That's when we typically see corrections. So nothing is really standing in the way of ASTR seeing a bit of a rebound after I can see that it has dropped down about 11% over the past 3.5 days. In terms of development activity, yeah, it looks like it actually has a dedicated team that is working to improve the asset and innovate. It's not one of those altcoins that has a pretty absent team and not really doing much with their token. So I like the look of ASTR based on the limited data that we have on it. And I appreciate the recommendation. It's probably the first time that I've looked at ASTR's metrics before. We can also, by the way, take a look at it on our social trends dashboard here. So there are multiple ways to look at it. Let's say I want to look at ASTR or ASTR together. And we can actually break it down by platform. So you can see the very minor amount of social volume we've had over the past 3 months. Not much discussion on Telegram at all, or on Reddit. It's a little more frequent on Twitter, but we're talking about like 1 or 2 mentions a day, and then nothing on 4chan over the last 12 days or so. So that's a cool way you can actually break it down. If you're wondering where the few discussions are related to an altcoin you're looking at, feel free to not just look at the social volume on Sandbase, but move on over to the social trends page here and type in both the full name of the asset, include the word OR in capital letters, and then the ticker ASTR. And that's a little cheat code for getting a little more info on it. Speaking of which, why don't we just do that for Moonbeam right now, also known as GLMR as its ticker. So we'll go Moonbeam or GLMR. And in terms of its social volume and dominance, really nothing special despite the massive rise that we've seen since February 6th, the past 10 days. Let me switch here. So if I just type in another cheat code, if you just put in the ticker and then you switch to GLMR, and then I'll put them both back in again. And now you'll see that the price is still connected to GLMR. So correction, the price actually hasn't been crazy significant over the past few weeks, especially compared to the rest of the markets. The social volume and dominance has been pretty dormant, not a lot going on there. Telegram, very few chats. Most of the discussions were back here on the 17th and 18th. Reddit is not talking about it significantly, nor is Telegram or 4chan. So another asset that has been relatively ignored by the crowd, which is generally a good thing and allows for prices to rise. It had its big spike right before the view that we were looking at on social trends. So this was back on around Christmas Eve. It got all the way up to about 59 cents. And since that time, it's actually down 28%, even though the last 5 days, it's back up 16.5%. So again, it's not an ERC20, so we'll have limited data on it, but we can look at the social volume and dominance, which is, just as we saw in social trends, fairly dormant. Interestingly, we are seeing a slight uptick in weighted sentiment. It seems that this minor increase has gotten people maybe a little bit more euphoric again. Unlike ASTR, this does have a little more risk right now, it appears, because of the minor amount of crowd FOMO going on. So I'd be a little bit concerned about that, especially since its volume and dominance is so low, yet its weighted sentiment is still showing positive. That means the few discussions being had about Moonbeam are very positive and related to the expectation that we're going to see another big spike like this. So that decreases the probability of that kind of spike happening again. So a bit of a caution flag for that. And unlike ASTR, Moonbeam is actually getting very low development activity overall. You can see that there are long stretches here where it's getting 0 GitHub events. It does get the occasional one, but it looks like it's just 1 or 2 on the occasional day, and then it goes back to 0. So in terms of a long-term hold, that means there's more risk in an asset like Moonbeam because the team dedicated to innovating and improving the asset is pretty invisible. They don't seem to be doing a lot on their GitHub. So that's just, kind of a mathematical look at the long-term viability of Moonbeam. Overall, though, I appreciate the suggestions, guys. I think overall, the markets can continue to cook as long as the key stakeholders are looking like this. Let me go back to that dashboard really quick. So yeah, as long as this dark green line is thriving the way it is, I think that Bitcoin has absolutely a good chance of making it to 55K and even 60K. We'll see how long this accumulation stretch can go. But like I said, this past week of activity is one of the best we've seen from whales and sharks in a long time. And of course, take a glance at the ETF dashboard. Let's see if I can pull that up really quick. One moment. I need to find that link. I should have pre-prepared it. All right, so here's a quick glimpse at the current ETF volumes. And we can see that overall, the total volumes have been looking pretty solid, especially on Tuesday. We had over $3.6 billion go into the ETFs. That's the highest day since January 2nd, and the third highest day overall since the ETFs began existing. And yesterday, or I should say the 14th technically, there was a follow-up with another 3.1 billion. So between these 2 days, nearly 7 billion in volume indicates that we're looking just fine in terms of the overall ETF activity. Even Grayscale's outflow began to increase again on Valentine's Day. So as volume has moved away from the old BTC that existed since 2015, it looks like it's going into IBIT still. It's going into BitB, definitely going into HODL, HODL, which has had 2 very large days the last couple. Actually, let me refresh that. Yeah, it's still, especially on Valentine's Day, huge inflow of over 8.4 billion. ARCB is still one of the largest as well. They were largely attributed to why the 13th and 14th had such high volume. But moral of the story, the total ETF volume is still massive, and it's only increased as February has progressed here. So I like the look of that, and that lends to the theory that Bitcoin can continue to rise, guys. So we'll let you know if we see any events that threaten this bull cycle, but as of now, I don't see any major obstacles. And congrats if you've been on this bull run with us throughout 2024 and even going back to mid-October. I think we'll have plenty of updates throughout the week. Monitor our insights page on Santiment or our Twitter, and we will catch you guys next time. Have a great, safe weekend. Thank you to Max Baresh, as always, for running the stream on the new software that we tested yesterday. And cheers, everybody. Talk to you soon.